Gold represents truth. And if we're going towards an oligarchical, totalitarianism, communist vibe, they are going to want to own all the truth so that you don't have it.
Why is so much physical gold leaving New York through Globex and going back into the zip codes of the owners who want that gold? Which was the answer is things are rotting. Things are rotting and counterparties want their physical gold back in their own zip codes. And what's the reason? It's very simple. It's not arbitrage. It's not tariffs. They don't trust the US dollar and the US Treasury the way they used to.
We're going into an era of financial repression where governments will follow the Japanese recipe, which is suppressing interest rates, especially on public debt, and the large masses will pay for that.
Actually, you're in a financial war against people who are inherently dishonest.
The biggest fear at the White House and at the Fed and the central banks around the world is what's the gold price? What's the gold price? If the gold price rises, that's an open indicator that your fiat money system is rotting. And then 1974, when the Comex kind of came to life, it was invented by people who knew how to rig the game. And the gold price has been rigged, I'll say it 1,000 times. And now that's changing.
And I'm here to tell you, understand the fullness of the trick so that you don't get fooled again.
That game could be played for almost the entirety of my life. You can still watch it. I've been saying just wait for the Comex to show its cracks. When that happens, you might actually get free price discovery in gold.
And we have central bankers that are increasingly reckless, but it's also because we're nearing some kind of like endgame or change, economic change.
Which is why we all have a duty to turn people into even just that first step. With gold investment, the most important thing is to start. And it can be 0.01 of an ounce of gold, because that's one less rioter. Yeah. That's one new person who understands sound money. That's one more person that has earthquake insurance just before the earthquake.
Even Goldman Sachs admits that China probably has 10x more than the World Gold Council reports. So if we were to revalue gold, then he who has the most gold wins. I got news for viewers, it's not the US.
Welcome to this session about gold of the future of finance, sponsored by GoldRepublic and OKX. I'm here joined by three marvelous guests with an even more marvelous landscape. Sorry, guys.
Fair enough.
Can't take that. Yep. And today we have actually a new face that you might have not seen in the previous sessions, and this is Olav Dirkmaat next to me. Olav, a pleasure to have you.
Glad to be here.
Maybe actually for the viewers, and before I go into any other topics, I would like to remind you that you are able to win 5 times 1 gram of gold if you comment GOLD. Only condition is you need to have an account at GoldRepublic and OKX. Now back to the introduction. Olav, you have been busy since I think the last 10 years, right? You're a professor at a university in Guatemala. Maybe you want to give us a little introduction of yourself.
So UFM, I studied in Spain. So one of my professors was this gold guy, big gold guy. This is a guy who drives a gold Bentley in the streets of Madrid because he believes in a gold standard, returning to a gold standard. So I had the pleasure to study under his supervision for a year. Did my doctorate, my PhD with him as well. And one of my professors went to UFM in Guatemala, which is a libertarian university. And he became president, and he invited me over to Guatemala a few times, and I really enjoyed it. So I thought I would go 2-3 years to Guatemala, a place that many people don't know, but we have a lot of US economists, gold bucks, investors, and we had them over in Guatemala. One example is maybe Jim Rogers. We gave an honorary doctorate in 2016. So yes, a lot of interesting things going on in Guatemala.
And also you've been telling me that you worked or had some collaboration with also Javier Milei, from the president in Argentina.
Yeah, so Huerta Soto in Spain is actually one of the inspirations of Milei, and he always cites him in his speeches. So the speech in Davos, I think he actually mentions his professor. It's a really close and intimate relationship, and he wrote fabulous books. He wrote in the 90s a book on cycles, credit and money, basically laying down a blueprint of how 2008 would come about. But already writing it in the 1990s is one of the reasons I went to Spain to study under his guy. So yeah, the book is very impressive, and he step for step he explains what would later happen in the run up to 2008. So there's a lot to learn there.
All right, and I've also been joined by the already known guest Francis Hunt, Matthew Piepenburg. Francis, I gotta say today you impress me. You have those glasses that really remind me David Lynch. He was also wearing those dark glasses, and well, rest in peace, David Lynch. He just passed away recently, and I actually had that quote when asked like, why do you wear dark glasses? Is that I wear dark glasses because the future is bright.
Exactly. Yeah.
and so maybe we could just start it off here. Is the future bright?
The future is bright for those that are prepared. It's dark for those that are stumbling forward without a clear-cut financial plan. That's my take. So there's a polarization. We're being carved in half. Those that have an understanding of where we've been taken and are positioning accordingly, and unfortunately the masses. And I think this is the biggest, most distinct financial event. And one of our most famous YouTubes that we did in London in the Greenwich Park was the polarization of the human race. And you're going to be part of those that survive. The great problem, unfortunately, when you have a large segment of the population that's going to be significantly worse off, is that it's going to be very fertile ground for politics of envy, maximal tax extraction, communistic type agendas, and all sorts of other social unrest. So personally, I feel it's very likely to be turbulent. Sometimes you can wear sunglasses just to keep the debris and the stuff out of your face that might be thrown up as well, not just for the light. And I personally feel, for the average man in the streets, quite concerned. And that's bad for all of us, actually, even if we have planned. It's not good, because it's going to make for a very toxic environment and a very envious environment, and some stupid policies. You know, we haven't tried communism yet, for example. That could come bouncing back in all sorts of forms. So that's my take on the outlook.
Yeah. Well, one of the many things as well is that many here presently, that's also the topic of today's session, Surprise Gold, is about also protecting and hedging against uncertainties, inflation, all those things that are actually happening and will happen. And I think today the aim of the session is to understand why. Why is it so important to own gold in your portfolio? Why is it, if you haven't had gold in your portfolio, and if you already have gold in your portfolio? So maybe let's start with this, Matthew. Why is it so important to have gold in your portfolio?
It's certainly au courant today. It's very important to discuss this question now. It's been important to be prepared for this for years in advance. You know, it's interesting, Alexej, we were talking about the botanical gardens here in Cape Town, which are extraordinary. I haven't seen it, you've said it's amazing. In Paris, we were talking about that. There was a famous 18th century botanist in France, a guy named Baron Cuvier. And he said, you know, I could look at a tree and I could tell the health or sickness of the tree just by looking at the veins in the leaf. In other words, the rot or health of a tree was very symptomatic in a small way. When we look at this analogy to where the world is rotting and the small little symptoms of it that are popping up now and becoming more headline making, they've been there for a long time. What I think is the rotten leaf right now, you could look at the BRICS and de-dollarization, you could look at SLV and GLD and how that works, and you could certainly look at these different arguments, but look at the Comex, it's making tons of headlines, there's a lot of noise, there's all kinds of numbers and millions of ounces coming in and out, and what it means, was it arbitrage, was it tariffs? But let's look at that rotten leaf. What the Comex represents to me is that rotten leaf. And again, I won't get into all the wonky math and numbers, but you've had 400 metric tons coming into London in the last few months since Trump's election, 75% increase in the Comex warehouses of all this physical gold coming in. It's also going out. That's the key issue. It's going out. It's the open interest or stand for delivery. And just to put that into context is more than just spitting out numbers. Put it in the context of why this is happening. In COVID, there was about 9 billion worth of gold going out of the warehouses in New York to be physically delivered, which is not what the Comex is for. It's a credit market, not a gold delivery market. In just the last few weeks, we've had 21 billion worth of gold go out of these warehouses. Why? Why is so much physical gold leaving New York through Globex and going back into the zip codes of the owners who want that gold, which was typically meant to be churned and rolled over? And the question is why? The answer is things are rotting. Things are rotting, and counterparties want their physical gold back in their own zip codes. And what's the reason? It's very simple. It's not arbitrage. It's not tariffs. They don't trust the US dollar and the US Treasury the way they used to. Doesn't mean the end of the dollar. Doesn't mean the end of the US 10-year. It just means, as the BIS has been warning and kind of telegraphing since 2023 when they made gold a tier 1 asset, that the world sees physical gold as a safer store of value and a better strategic reserve asset than an IOU from Uncle Sam or a US dollar, which is still supreme but not hegemonic. This is the simple leaf that Baron Cuvier, if you would say, or when I look at gold, and we can go into a million verticals of why gold matters and why you need to be prepared in gold. But the bottom line is the world in general, and certain countries in particular, and Eastern central banks specifically, are looking at the US dollar and the US Treasury differently. It's just because the world has gone over its skis in debt. Currencies are being debased. Von Mises warned of this. Malay understands this. Americans in the West don't want to see it. The East has been seeing it for years. They've been playing chess while we've been playing checkers to get reelected. It's not dramatic. Again, not the end of the dollar, not the end of the world reserve currency. The world is absolutely changing. And the way they look at what is a true store of value, and I'm sorry, it's not Bitcoin. Central banks aren't stacking it. I have nothing to say negatively or positively. Let's just be honest about this. Gold, that barbaric pet rock, that analog dead thing, is what the world wants. Not to go buy houses and cars with, but to save in gold and spend in whatever their fiat is. And that to me is the leaf, the rotten leaf. The Comex is the latest symptom. There's so many, but it's very simple. The world is looking at gold very differently. We've kind of all understood that for years. And von Mises wrote about this in the 1950s. We've been talking about this, but it's actually no longer theoretical. It's no longer academic it's no longer just executive or trade. It's just what's happening in the world. Sometimes it's hard to see history when you're in it. It's actually happening now. It's not even projected. It's been going on for years. It's been accelerating in the last few months. It's literally happening today as the markets gyrate. But these are just short-term indicators. The long-term indicator is the world doesn't trust the dollar and the US IOU like it used to. It's that simple.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults, with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth.
One point I'd like to bolt in on that you had asked me, that Matthew triggered in me, is rather than all of us having 100 kilos of gold and a ton of silver, to be so much better, I'd be quite happier with half that and many more individuals having small allocations. Because for every person that we introduce, that's why I'm almost messianic. I'm not just talking my own book, because that's one less rioter. Yeah. That's one new person who understands sound money. That's one more person that has earthquake insurance just before the earthquake. And that's our job and role here, actually. We're in the boat, and we're trying to pull people into the boat. Because it's almost, we're talking about financially saving people at a balance sheet level, at a social level, and all that goes with the hunger and the weirdness. And every person that has even the smallest allocation that you bring on board, I talk to taxi drivers about it. I can't shut my trap with giving financial advice to everyone I contact. I see it as my duty. And for everyone we pivot, even on a small scale, that's one more person that's not voting communism, that's not going to take the new thing, and has seen a little bit of the light of what is true value scarcity. And it's 100% a debt-based collapse, as Matthew pointed out. The trust is going, and where's it flowing to? As he also said, not Bitcoin. So I just thought I'd throw that in.
Olav, do you have any insights about it? You're also a student of history, right?
Yeah,
You've
absolutely.
studied history through and through.
Yeah.
Is there any moment in history that this kind of resembles to you?
Well, the fall of the great empires, but adding a little bit to what Matthew said, we also have this like frame of reference which is completely distorted. If we would go back 20 years in time and we would take a snapshot of what central banks are doing nowadays, or even governments doing nowadays, and would say, well, is this something within the possibilities that might occur in 20 years from now? People would call you insane. We have central banks buying stocks, we have central banks buying mortgage bonds, we have central banks just printing unlimited amounts of money, and nobody really opposes it. And we have deficit spending, right, in the tens of percent over GDP, which is insane if you go back 10 or 20 years, which is not that much. I think we have multiple decades of artificially low interest rates, which have propped up a huge bubble in public debt, a huge run-up in public debt, and we have no way to pay for that public debt. So I think we're going into an era of financial repression where governments will follow the Japanese recipe, right? Which is suppressing interest rates, especially on public debt, and the large masses will pay for that in very low returns, very low interest rates, on their pensions, on their financial assets. And I think the only way out is, in fact, something like gold, right? Escaping from this type of financial repression is going into gold as long as we can, because as soon as everybody will do it, then probably it's going to be an exit that's going to be a door that will be shut down by the government anytime soon. Remember gold confiscations in the 1930s and other restrictions on buying gold over the past century. So it's very important to be prepared, as Francis said.
And also, like a lot of people, like Luke Roman and many others, see gold as kind of like the alarm, like the alarm, like fire alarm that is being shut down and silenced, put on silence. And I think one of the many things is that a lot of people talk also about how gold has been suppressed in terms of price by central banks, and that now we start seeing the actual how do I call this? The bubbles that are floating to the surface of actually that mechanism being broken, and that this price is now being finally actually going back to its mean where it was supposed to be. Do you see it this way, or do you think that this gold suppression could actually be kept, or will basically not work anymore? Like, how do you see that?
I've been writing about this for years now, and again, it's always the gloom and doom gold executive from Zurich just trying to scare investors into gold. That really annoys me, because it's not that. And again, it's not just an apologist for gold. There's a lot of things that I love about speculation, about even cryptos that you can run. There's all kinds of things I'm in favor of, but it's an open secret that, well, first of all, the LBMA banks and the Comex and the New York and London exchanges, they don't represent gold, they rig gold. And I think that's artificial legalized price fixing. If you look at what happens on the Comex in New York, it's a futures market. A handful of very large banks can have 96% paper and 4% gold to put a permanent boot to the neck of the gold price every morning at 8:30 with this long short that just kind of perpetually keeps the price fixing down. That's possible even post Basel III, when you have to have a certain amount of allocated gold. It scared the banks, but it's possible as long as you have enough physical gold that isn't standing for delivery and open interest, which is up 750% open interest out the door this year. You can continue that charade of price fixing and calling it just the futures market, but it really is just a permanent short. The Comex futures on gold came out in 1974. Not a coincidence that came out right after we got off the gold standard. And it's not a coincidence that we had the petrodollar around the same time. When you have an unfettered dollar with no chaperone in gold, the biggest fear at the White House and at the Fed and the central banks around the world is, what's the gold price? What's the gold price? If the gold price rises, that's an open indicator that your fiat money system is rotting. That's that broken leaf. And so that game could be played for almost the entirety of my life. You can still watch it. I've been saying, just wait for the Comex to show its cracks. When that happens, you might actually get free price discovery in gold. And then remember, you don't just have the London and New York exchanges, you now have the Shanghai exchange. We were talking about the Moscow World Standard a few years ago. We thought maybe, you know, these guys would do it, but it's actually China, which is one of the biggest gold producers and importers in the world. They're one of the C in BRICS. They're right next door to Russia, which makes 2/3 more gold and twice as much gold as the US. So again, the world is really changing. It's not theoretical. It's not gloom and doom. Look at what's happening. Get past the gold bug, anti-gold. If the gold is running out the doors of these warehouses where it's been fixed for almost 50 years, that ability to price fix changes. And then you have the possibility, imagine that, of actual free market price discovery in this terrifyingly important asset, which has scared central bankers and presidents since 1971. And then 1974, when the Comex kind of came to life, it was invented by people who knew how to rig the game. And the gold price has been rigged, I'll say it 1,000 times. And now that's changing. It's not an apology, it's not a conspiracy theory. If you understand how the futures market and the forward contracts work, if you understand the commodities market, in particular with precious metals, of course, because central banks were terrified of the gold price rising. Again, because when the gold price rises, that is a MRI, open system, CAT scan that your fiat money, even the world reserve currency, isn't what it says it is. And the world's catching on to that. It just is.
We talked. You mentioned BRICS, but maybe we can talk about this later. How do you see like now that resurgence of the physical? Like, is that something that will be now the norm? Like in the coming decades, might even say, in terms of like owning the asset, because it looks like a run on paper. On paper assets, not just gold. There's all kinds of other derivatives. Francis or Matthew?
Yeah, I'm not sure I fully understood the question. In the metals market, there's obviously paper metal and there's the physical. And I think everyone here is quite clear on which option is the one to be taken. In the ETFs, the legalese have been written that they can do cash settlements. That's the end of the game. So in a reset moment, some of your biggest gains, and this is, so I'm getting into speculative forward looking. So I'm kind of a futurist as well, but I'm a bad guesser. I'm a good guesser sometimes, so who knows. But we look at how things have happened before and we treat things as a microcosm and we extend what if they played a similar route. And a lot of the gold gains, so just on that ETF type versus physical gold, because it's much more convenient to have something you don't have to cart around, hide, secure, or lock up, or vault, etc. One of the big things that, in terms of the major moves, has come when government have essentially either confiscated or they've done a by decree revaluation. So if you're ever in one of the paper instruments, you could miss the most significant part of the move, which is the gap trade, I call it. And God knows where the gap trade could be next time. And some people, look, this is a little bit blue sky and a little bit greedy, and I wouldn't give it the super highest speculation. But if people wanted to, they're at the end of the runway of debt. If they wanted to reback all the debt that they've expended, the revaluation on gold price would have to be astronomical. I think if they did 84,000, they would have 40% or 60% backing. I'm not quite sure. I wouldn't want to stick my head out on the maths just yet, but that would probably imply you might need somewhere between 100 and 250,000 to actually, to get fully backed. And I would even argue, if you're going to, why would you just get fully back? Why wouldn't you overback? Because you're clearly a spender. The government policy is inflation. Central bankers are inflationary inherently. And they even admit it. They say, oh, a little inflation good, deflation really bad. There's nothing wrong with deflation. That means your money buys you more. That's flipping awesome. For a lengthy period, the Japanese had an immense amount of deflation. I never saw a poor Japanese tourist in London. They came on these amazing buses. They had the best camera. They were dressed to the nines with their baseball caps and their sunglasses. It's great. Tourism was cheap for them. So you're being lied to by a cartel that actually have an implicit wealth reducing factor called inflation that is built into this system, and every central bank by policy is inflationary. That means they're putting you on the wrong end of a compound interest equation that is continually detracting wealth that keeps you running on a treadmill far longer than you need. And gold is that defense mechanism. So having said all that, that is their policy. So if they were going to do a reval and they know their policy and they don't want to, we kind of have entire generations. You need a generation to forget to pull the same scam again. If you're running a Ponzi scheme of a global scale, you kind of need a generation to forget, because there's a lot of angry people when they lose their money in banks and all of these things happen and they tell their children and all of that. You kind of need to anesthetize and numb them and put a bit of time before you try pull the same trick again. But literally, this is a one-trick pony, central banker inflationary policy. And that's how you manage and control citizenry. So they will implement something along the same lines again. I mentioned that Lynette Zhang comment yesterday when we spoke, but I really want to hammer it one more time again. The system you won't get I think, is full convertibility. And that is when you have gold back. In other words, you should exercise your right to take whatever derivative instruments they give you, like it was a dollar in the old days, maybe it's some tokenization, and convert it for gold and take it out the system. If you're not getting that, it is not gold backed. If you are getting pegged, it's a totally different thing. That means they'll say, we control the price, that's where it is now, and as a result, that derivative, whether it's a paper dollar or some electronic CBDC or anything else that they want to, what they really want to do is leverage the trust gold has to try reflect that trust on their new scam in the way that it'll be brought about towards you. And your job is to reject being fooled again. There's a great Who song, you were mentioning things. There was also a guy who sung, I wear my sunglasses at night as well, but I don't want to go in too many directions. And he said, let's don't get fooled again. And I'm here to tell you, understand the fullness of the trick so that you don't get fooled again. And I don't see them as orchestrators of the system giving you full convertibility. And until you get that, that's the pain point, and that's the corner of the lie. That's the magician's trick where the ace comes out the sleeve. Watch the sleeve. I want to see what's in your sleeve. And if you've got to hold their toes to the fire on that, we want convertibility. If you want the trust that goes with gold, I want to be able to get the gold at any time. And you should regularly, if you did get it, you should regularly exercise that right to ensure that it's not just a promise on paper that they hope no one to take too seriously. So that would be my comment on paper versus gold. I'm not sure I fully answered your question because there's paper in other realms and other markets, but that I think, given we're talking gold, that would be where I'd nail that. And
it was much of. I mean, that was exactly what I was getting to. Is just the derivative nature of just assets in general that reverts back to its mean of just having the one-to-one convertibility of being able to actually get what you paid for.
That's an absolutely important part. You know, we have on Van Greyerts on our website, we have a why gold page. And it's more than just why gold. We all kind of can talk about that, but it's also how gold. How do you own gold? And this distinction between paper and physical gold, I've got to give full credit to many people, but not myself. But Egon van Greyerts, when he formed our company decades ago, understood to keep it out of the banking system. We can talk about the many reasons why that makes perfect sense. To have it privately held in a jurisdiction that protects that asset. To have physical rather than paper gold, what is absolutely, and we can get into the weeds of this, GLD and SLV, ETF gold is absolutely not gold. In fact, you have to have 30 million worth of gold to get delivery out of the GLD. And now we have JP Morgan, who had to pay a $900 million fine for fixing the silver price, taking over the gold custody and the silver from HSBC. I mean, these are the foxes guarding the hen house. You can't get physical delivery. You can't get one-to-one ratio of true ownership through paper.
It's almost like
ETF.
a fine is part of your qualifying criteria to be given the host. You know,
and you
prove you're a criminal, then we'll give it to you.
Exactly. And you talk about the middle class, which in the U.S. is obliterated. Germany, England, I'm seeing it, but in America, it's an open truth. That GLD, SLV gold access is really a piggy bank for the bigger banks to get liquidity. There have been 16,000 tons came out of GLD this year. It's not because retail investors are going into NVIDIA and Bitcoin. It's because the big players are taking physical delivery out of GLD, and the retail investors are funding this. It's absolutely appalling when you look under the hood, take off the tinfoil hats and the gold bug apology. Just look at the facts. You can have your own opinion, but facts are facts. They're stubborn things. GLD, SLV, horrible ways to own or think you own gold or silver. And what Egon said many years ago is, the banking system's rotten. There's all kinds of ways we can prove that, and it's not just gold bugs. We understand. We have a lot of bankers who are clients who hold their gold with us, not their banks. You certainly don't want to hold it in paper form. And so you got to get out of the banks, and you got to get out of the ETFs, and you got to hold it physically. You don't have to be a millionaire in Zurich to do that with us. As Francis said, and in Guatemala or El Salvador too, think ahead, be smart, buy your grams, collect your ounces. We have very high minimums at Van Greyerts, but 99% of the audience I'm speaking to is where I come from, poor middle class America. That's where I came from. And that matters more to me if it's for my own good, because there's so much wealth inequality, wealth disparity, that's horrific. Your central bank and your senator and your president, left, right, or center, is not going to save you. So what can you do? You have to be your own central bank. You have to protect the purchasing power of your own currency, whether it's a peso, a yen, a yuan, a ruble, a won, or a dollar, or a franc. You have to do that yourself. But what's sad is many Americans can't even get through the month with rent and gas and food. This is the middle class. So thanks a lot, Matt, for the advice. But frankly, 20% of Americans spend their entire salary on rent, and they take a second job to pay for anything else. How are they going to start protecting themselves with gold and silver? It's very hard. And where do they go? Their little advisor down the street, go to SLV or GLD. It's a trap. And so it's a brutal scenario right now. But this is what happens at the end of a criminal debt crisis. You have social unrest, you get feudalism masquerading as capitalism, you get wealth inequality, unprecedented. We have the largest debt crisis in history in the US and globally. Debt, as David Hume said, as von Mises warned, destroys nations. It does. So the nations, that rotten leaf, they're not dying, they're not forever gone. The Dutch had an empire, the British had an empire, the US had an empire. It's not the end of the Netherlands, it wasn't the end of England, but it changed. So it's being prepared for these changes, not gloom and doom, it's the end of the world mushroom cloud, but financially it's a mess. Gold is rising. There was a buyer just recently in the US, an unknown buyer, bought 30 million ounces of gold a couple of weeks ago. That's over 90 billion. Who was that? Or what was that? Again, another symptom of somebody or something or some bank with a lot of money getting physical gold. Just like the BRICS have been doing since 2022 when we weaponized the world reserve currency, just like the Comex market outflows are showing. How many symptoms do you need? How many indicators do you need before you just say you're a gold apologist? I mean, again, get past all that. Get past it. I was a bond jock for many years on Wall Street. I was a hedge fund manager. I was all about risk assets. I have nothing against it. I didn't go to gold because it was shiny. Once you understand, no matter how you measure your wealth, whether you're a millionaire on Wall Street or whether you're a dentist in Toledo, Ohio, you're measuring your wealth in a paper money. Don't, because to Francis's point, and Olav knows this very well, it's a beautiful ice cube melting day by day by day through the invisible tax of inflation, which is the only way out. As Paul Tudor Jones, all roads lead to inflation. We're going to inflate or die. We certainly can have massive deflationary moments between now and then. A market mean reversion. Absolutely deflationary. Raising rates under Powell last few years, definitely deflationary. A recession that we finally admit is real, very deflationary. But what's going to be the response? QE to the moon in some form. And then some type of reset where gold will have a central role, as the IMF kind of telegraphed in 2020. They already said, even if we go to this CBDC nonsense, which is inevitable, it's still got to be backed by gold to have credibility. So get past all the debates. Just look at where the world's going, look at the symptoms, look at the flows. Those are facts. Those are not opinions. You can look at them every way you want. You can ignore them. But again, whether you're a dentist, a plumber, a millionaire, or a billionaire, think about how you measure your wealth. The really sad part is, to your point though, it's very hard for an Uber driver or a single parent in Tennessee or Virginia or parts of the suburbs of Frankfurt to find gold and be able to afford that and have the faith and confidence that's going to work for them. And that's the real tragedy. It always ends this way. The plankton get eaten by the whales. And that's true when you get drafted, whether it's Vietnam or Iraq, or my friends who were from the Midwest small towns who went off to fight these wars that they now regret, or whether it was my dad's generation. It's always the middle class or the poor who get the fodder militarily, and it's always the middle class and the poor that are the fodder financially. They're not hedged, they're not protected, and they're not talked to honestly. That's a great crime.
I think Matthew is more optimistic about the middle class in Europe than myself. Mm-hmm. I do think it's like this persistent myth of inflation is a normal thing. Like price, they talk about price stability, our central bankers, when they in fact refer to just a policy of straight up year-on-year inflation. And that's not normal. That's something that was consciously created, and that we're, especially middle classes, are reaping not the rewards, but suffering the consequence of that very decision. Mm-hmm. And we have central bankers that actually, are increasingly reckless, but it's also because we're nearing some kind of like end game or change, economic change. I also like to point out that whenever we have like big like political shifts, it's usually because we have great economic shifts as well.
Right.
And I think that that's something we'll see in the next 10 years. But the middle classes in Europe are suffering as well. We have government regulation everywhere, the idea of the bureaucratic state, administrative state, inflation. We have a middle class has been economically stagnated in Europe for the past 2 or 3 decades, where real income hasn't grown not a bit.
Yeah.
So inflation is hurting middle classes everywhere in the Western world. And I think the only a way to get out in some sense is with gold. And I do think there's a lot of options for those middle class people to actually invest some of the savings in gold, especially when you look at their pension funds, when you look at their mandatory investments, like state mandatory investments. Usually they're not into gold. They're usually forced to invest in public debt and buy off the huge public debt that exists. So it's their own responsibility to take some of their money, hard-earned money, and put it into gold because no one else will do it for them.
Yeah, very good point.
And I mean, we're all kind of like, I think, aligned on that as well. But I also would like to bring on some more challenging questions and maybe some critics that are being raised about gold itself as an asset class, but also as a way of storing your wealth, more into the technicalities. So it's something that's clunky, it's physical, you need big planes to transport lots of them, just like kind of like the opposite of Bitcoin, for example.
Yep.
But there's been recently, I saw something on X and I saw it kind of as a fake type of news article, but it was about a question that's quite legit, which is, how do you know when gold is gold, right? The way of testing gold and assuring yourself that what you have is actually gold. Do you see this as a big challenge, especially when we're talking about now what's happened at the Bank of England, and also reports of that gold stash that was, if I'm not mistaken, the Australian Central Bank that stored some of it in the Bank of England up for lease, and that actually might be either sold or melted into new bars and kind of lost in the books.
Yeah, again, it goes to the question, we're past the why gold, but how. And the how gold can be very dangerous. It can be a minefield for retail to high net worth to institutional investors. I was at a dinner a couple of years ago in Munich. The company that was the technology of how to assay gold, to verify that this is gold and not a painted brick, so to speak. And they were telling narratives of people kind of meeting outside in the suburbs of Frankfurt or Munich through kind of sketchy buyers with better premiums to get physical gold, kind of under the table gold. And the guy had stacked over 650,000 of this gold. Turned out it was just not gold, right? That's an extreme horror story. Then you're standing for delivery out of the Bank of England. You're not getting your gold because it's been hypothecated God knows where. So whether you're a guy in the street or you're an institution trusting the Bank of England, and let's not forget JP Morgan, Morgan Stanley, or UBS, where when you needed it most, it just wasn't there. Again, so that goes to the how, and of course, critics of gold can say, be careful, you're walking through a minefield. That's true. And whether you're buying from a retail shop in Germany or France or the US, are you getting actual gold? There are a lot of advices I could give on the retail side, but there are always risks. We get our gold directly from the Swiss refineries. 70% of the world's gold is refined in Switzerland. We have direct lines with them. I'm not saying that to push us up. That's an advantage for the high net worth clients that buy their gold through us. But some gold, we have gold from 90 countries. They'll bring it from Australia. They'll bring it from New York. When it gets there, we have the technology to assay it. But again, that's for the ultra high net worth client. They have the money and the means, and we have the refiner relationship. So we're not worried about whether it's real gold. And yes, so again, that doesn't help everyone listening. That is a real concern. The other concern is if you think you hold gold at Goldman Sachs or Morgan Stanley because your PWM advisor, who is always going to be the right guy to listen to, they'll tell you it's perfectly safe. But a lot of that gold is commingled. A lot of it is hypothecated. A lot of it is not segregated and held in your name. Again, understanding why owning gold in a bank is a very dangerous thing takes more than a few minutes to explain, but it's a very real problem. I've written about it extensively, not as an apologist, not as a conspiracy theorist, but based on the facts and evidence and lawsuits that we've looked at. And again, the irony is it's almost frustrating when we have very wealthy bankers from the US and Europe holding their gold with us and not at their own bank. That tells you something. Again, so you have to make sure you have real gold. You have to make sure that your gold is in your name, allocated, segregated, whether that's in a Folgers can under your mattress, which can be dangerous, or whether that's in a private Swiss vault or someplace in Dubai, whatever, or Singapore, your jurisdiction of choice. Having it separate from that system, having it in your name, and having it not commingled or hypothecated or levered or leased, because the moment you lease or lever your gold, it's not really your gold. Now, there's some people who want to leverage their gold, that's fine. And you're right, you can't take a kilo bar and buy a house in Beverly Hills or Cape Town. You have to convert it to fiat at some point, and that takes more time than a Bitcoin transaction. As Voorhees would say, I can do it in 5 minutes, boom. That's true. So there are certain advantages that certain electrical versions of money can have But again, I'll wait a few extra days to convert that kilo into fiat where I need to spend it. I'm okay with that. That's a high-class problem if you have physical gold. If you're a guy on Main Street who has a Folgers can of ounces, yeah, you've got to then go find that, and then you've got to monetize that into fiat, and that can be difficult. I'll take that difficulty all day long and expose myself to the larger risk of just not having it when I need it. But the actual other problem you talk about is it real gold? Well, yeah, you have to assay that gold. And if you are doing this privately or you're buying from a dealer down the street, there are very reputable retail dealers, of course, online to brick and mortar. But yeah, that is a place you have to be able to assay it. You have to have the technology to do it. You have to pay the extra cost to verify it, for sure.
Yeah. I mean, we at GoldRepublic, for example, and now it's going to be like shameless self-promotion. Yeah. We do have like daily sending messages of or positions to our clients with the bar number on it.
Yep.
Clients can just show up to any vaults that we store the gold and actually just retrieve the gold that they have with us. And we do regular audits. And that's, of course, also like one thing that you need to make sure is that where you source, as you mentioned, refineries, LBMA approved, all of that needs to obviously be taken into consideration. What else do you think is important to know or to have in mind when buying physical gold? Olav, Francis?
Well, mostly a price premium. Like, what are you paying? I mean, we don't want to be too cheap because we don't want to get a bar that is not of high quality. That could possibly be a counterfeit. And I really, by the way, enjoy that GoldRepublic only uses like newly minted bars in their storage from very well-known and with high reputation refiners in Switzerland as well. So that's something I really would advise. And then not just overpaying for gold. So I always tell people to buy actually bars, and if they cannot buy a large bar, maybe a smaller bar. Coins tend to have a higher price premium, and also they have some kind of like collector's value, which might fluctuate in time. So I generally advise people to try to replicate what high net worth individuals do, which is try to buy real bars of gold. So price, I guess it's something of price premium versus just security.
If we look now, because Francis, you mentioned something earlier about like every consumer and every person having to own just a few grams is already like whatever you can put your hands on to just a little bit to have like this safety raft, right? The same is also happening if you look at the way physical gold reserves have been growing in the past decades. The BRICS countries have amassed, I think, 150% increase in just the last 15 years. And this, you can kind of observe and see how the levels of reserves have been actually more and more equalizing, the US still being officially one of the biggest. Some reports say that China has up to 10-fold what they actually reported. We can maybe speculate about this, but we see also a trend on that nation-state level.
On that point, I remember Kissinger, who's not someone I quote very often at all, but he once was, and it's alleged to have been attributed to him, and he said, the gold is moving from west to east, gold is the real money. So the wealth is essentially moving from west to east. And this statement is behind a lot of my reasons why I actually say even Europeans, I know there's children, I even say people should leave, that there's such a bad downdraft when you have the right sizing of America, you have the right sizing of Europe to live within your means when nobody considers your debt a reservable asset. Much like, imagine Europe, the United Kingdom, or Commonwealth nations and America are now, debt is the equivalent of what you used to think of Argentina and Italy before the Eurozone, or some of what you look down on as a third world nation, let's say. I don't look down on nations anywhere, actually. I think these are all the places we should be moving to, funny enough. But people have that snobbishness. Imagine that becomes how debt in Europe and the Western world is perceived. How you're going to live? Well, you've seen the boomerang crisis to crisis that the Argentinian cycle had. These are cuts. It's like a company that's going bankrupt, had lots of businesses turned into a big, fat, bloated conglomerate, and they keep cutting off businesses and industries they were involved in, and they keep hiving off, and they're still not making money. And the more it becomes morbid, the more the highest quality people move. So with the gold moving, I actually see it as the fulcrum. You have to almost think of this in a religious sense, you know, the Holy Grail, or help me with the phrase of the thing that's supposed to be in Ethiopia, you know, that everybody forms around. It's kind of biblical in essence. With that often goes venture capital, trust, new business operation, etc., etc. We've had every major technological unicorn come out of America. I'm saying that's about to end as well. And as the unicorns start to occur in Beijing, Singapore, capital formation is going to move more, I see, to Singapore. The Middle East is going to become a thing. I don't particularly like them, the Saudi. I have reservations on all of that, but there is, without doubt, that is happening. They've got the huge oil fields that are doing it. So it starts with gold, talent, venture capital, industry follows. And that you're actually seeing the dark side of the moon now for the West, and potentially a greater sense of livelihood elsewhere. And, you know, it's always best to be part of the first cut. You get the most generous layoff package. You don't get to ride the whole morbidity and wondering every day if you're about to lose your job and depressed. And you're not the last guy when the bankruptcy pages hit in that doesn't, your redundancy check just for that month doesn't clear. I'm saying don't be the last to turn out the lights. I'm not saying America's disappearing. No one is saying that. I think the might is going to be deeply right-sized. So, I mean, in our presentation recently in the Dollar Vigilante, we said if you want to short the military-industrial complex, it's quite clear we are a debt-funded nation and we can't, the credit card's been pulled. The US military-industrial complex cannot sell to the scale, and they will get to a point where they won't even be able to service and maintain that which they already have. So we're going to see the classic F-35, which I consider a major melon, rusting and all the wiring taken out in the desert somewhere. So all of this is actually, it's the gold story is literally the magic box that around all wealth moving in that direction is going to see everything industry, and it's going to see immense hardship, and people battle to see that. Surely not a silly old pet rock as Matthew was, you know, Warren Buffett's been very dismissive, it doesn't pay yield and etc., etc. Actually, it's the wealth, it's the fulcrum. It almost needs to be viewed, and I don't want to get esoteric, but see it fundamentally and rationally, but there's also almost a spiritual element with it. The gift of creation is going to be moving out of the West. And I think this is a much bigger move, and I think is a horrific downdraft, and they're going to go into night, and the East is going to have a better time of it as a result. So, I mean, I'm not even sure whether I've answered your question, but the amount of the gravitas of what's happening, they're cutting. Elon, the mandate Trump and Elon have got is cutting. And as I used the analogy before, you're going up to the heroin addict who's consuming 10 times a lethal dose for someone on the first time, and you're taking away his heroin and giving him a green smoothie. He's going to hang himself. He's not, you know, you don't come off it like that. So this is going to lead to an enforced recession. They're taking the right action too late. Because no one had the guts to do it. And I think it's part of the controlled demolition, because I know they will take the right action into collapse, and they know it's going to lead to collapse. So if we're going to see the final stick that we're waiting for, the data point, is the unemployment. And we've got the yield curve reversion, and as it turns up and it breaks the zero, it reverts back above zero. Every major recession and unemployment has followed. Mm-hmm. And now you've got the guys that are making a feature out of the Minister of Defense saying non-core things need to be, you know, we've got to just focus on that which is absolutely involved in the delivery. That's code for we're downsizing. And Trump saying, Elon, you must push harder, you're doing a great job, but push harder. That's code for chainsaw instead of scalpel, please. You know, so I'm here telling you, the recession is about to go into free fall. And right now, even on the short-term basis, I actually think we're in a localized high for gold because a lot of people will be forced sellers. So it can dip. That doesn't mean the macro case on anything we've said is undermined. But when you go into contagion, everything that isn't nailed down gets sold, et cetera, et cetera. So it's a risk of feeling that I'm getting. And I don't think the policies of the US government are going to nurture the downturn, they're going to accelerate it. So, you get, everybody thinks there's mean reversion. There's also a concept of you go to the polar extremes. So adding the right treatment actually causes contagion. And we had an example of that with Liz Truss and Kwasi Kwarteng in the UK. They went a stimulus budget. Actually, fundamentally and macroeconomically, it's what Mile is doing and everything else. We need growth, we need entrepreneurship. And she got thrown under the bus, as did he, and the bond markets wet the bed. That's your heroin addict saying, no smoothies, please, more crack. And that literally is it. They couldn't take it. They had a wobble. In short, they can't even really take the remedial action. This is hitting the iceberg. This Titanic has to hit the iceberg because there's left you sink, right you sink, and straight you carry on and you hit the iceberg. So there's a mathematical inevitability about it, and there is the greatest secular moving of wealth. We've got to remember, most Americans highly leveraged. Highly leveraged. But if you look at the total population of the world, the West and the Americans, much higher incomes and everything else, and the rest of the world, much more numbers, but much lower incomes. We're actually going to see this happen. We gave up our manufacturing base. We gave up a lot of things. We stopped being trust society in our money, in every other aspect. This is almost this karmic spiritual reshifting where someone else is going to get a go at our expense. So I am super bearish Western world, full stop. And the contagion is going to be much, much harder because the cure keeps coming at you. Because we've been doing this for so goddamn long. To unwind, it's going to take multiple cycles of spiraling down. So this is the big short, all again, on all financially leveraged assets and all hyper expenditure areas, such as I gave the military-industrial complex, but it'll be brutal for even pharma, manufacturing. The reliance and the cost of healthcare is totally unsustainable in America. So you can project this across multiple industries. Who's been living off the fat of the financially engineered world hardest? Cars, Americans spending 7 years and buying 60% of a car and having a 40% balloon payment. You're going to have a repo glut. So that's where I'm at. It's big. It's the biggest one you're going to see. And it leads to their solution, I fear, which is why we all have a duty to turn people into even just that first step. With gold investment, the most important thing is to start. And it can be 0.01 of an ounce of gold. You've turned a taxi driver into something and he's watching something else and you've switched the light on in his mind. And, that's where I'm at. It's pretty Armageddonist, but it is what it is.
So this is interesting. The west to east movement is particularly scary because we're not really sure about how much gold is then flowing to, for instance, China. There's a lot of gold mining, as Matthew mentioned I think Matthew mentioned it earlier, in China. We really don't know the full extent of gold accumulation in the east. There's actually a very interesting Dutch guy who dedicated years of his life just to figuring out the flows, Jan Nieuwenhuis, figuring out the flows, the real flows, inflows of gold into China. And I totally agree. We have this big movement, but also the basis of society is basically stable money and capital accumulation. We need savings and investment, and we're doing quite the opposite in the Western world. So that's where we get the stagnation. Instead of saving and investing productively in a productive way, we get all the saving, which isn't that much, but saving, and we're investing it in public debt, which is not productive. So, the East is giving right now the economic example to the rest of the world, but it means that we'll have this movement to the East. But
on manipulation and that movement, sorry to jump in, on manipulation and that movement, it's important to point out something that quite clearly highlights, because over here, Matthew has mentioned, look, it is manipulated, take it from us. It ties both this dot and the East to West movement that you've picked up on. Olav, is that in actual fact, if you see how the markets trade, the London to the New York session has always been a sell. And there's a beautiful chart, and I've saved it so many times. Unfortunately, it's not an area where we can visually show it. But actually, if you went long on the Asian Open, and you closed on the London Open, and then you had another chart where you went long the London Open and closed at the end of the New York session, and then you just had the gold price. Now the gold price, and we went back decades, it's a huge chart. So the standard gold chart is a bit of a parabola like that. if you actually did the worst case, where you were buying the London and selling at the end of the US, you actually had a gold chart that was losing value. So let's just be clear, choosing to buy gold at a certain time of day, actually you are well down on multiple decades. Multiple decades.
Let's get.
And then the final chart is the one where you did it the right way. And it is an absolute extreme parabola. So that's the movement, and that also brings the manipulation together.
I think it's hard for the average guy in the street to understand that. And I think, to your point about gold moving from west to east, in your Kissinger quote, Kissinger once said, to be a friend of America is dangerous. Oh no, to be an enemy of America is dangerous. To be a friend is fatal. Again, I can't stand Kissinger for a lot of reasons, but he's certainly smart and clever. And when I think about that, to be a friend of America is fatal. Look what happened when we made the stupidest decision in the history of the State Department to weaponize the US dollar. This has nothing to do with what you think of Zelensky or Putin. Nothing to do with that. Just the decision to do what John Maynard Keynes warned against, what Obama warned against in 2015, and what even Robert Triffin warned against when he came to the Congress in the 60s. Don't weaponize a neutral reserve asset. Since we did that, for whatever we think of the war, it was a massive mistake financially and fiscally, because Eastern central banks went from buying 118,000 tons a year of gold, they tripled it after 2022 to today. So the stacking of gold, because they lost trust in that asset, because we were going to do something noble for Zelensky and punish Putin, and all we did was push China and Russia closer together, and Eastern central banks saying, that genie doesn't go out of the bottle again, go back in the bottle, you've weaponized the currency, we're going to look at a better asset than your dollar and treasury. And now we have, this stacking of physical gold. Going back to Kissinger again, because in the 70s, EU or European countries wanted to revalue their gold. Let's just revalue it because, we need to do this to cover some debts. Well, then Kissinger got really nervous because in the 70s, he knew that maybe America didn't have as much gold as other countries. That was in the 70s. Imagine today what China and Russia really have, because we know the World Gold Council is a fiction. It's as much as a fiction as a BLS CPI number. It's an absolute fiction. Even Goldman Sachs admits that China probably has 10x more than the World Gold Council reports. So if we were to revalue gold, then he who has the most gold wins. I got news for viewers, it's not the US. So it's crazy that we're even talking about an audit. You learned in law school, don't cross-examine and ask a question if you don't know the answer. We audit US gold, we don't have as much. Why do you think Kissinger was so terrified of revaluing gold? Because he knew when no one else wants to sail out, we don't have as much gold as the others. And that was in the 70s, it's much worse today. So that, he said, would end the Pax Americana. He said that. And think about it today. If we revalue gold and it turns out China, who's been playing chess while the West has been playing checkers, has more gold, it doesn't, again, mean the end of the US dollar, the USA. It just means we are certainly no longer hegemonic financially, monetarily, currency-wise, that we were just 10 minutes or 10 years ago. And I think that we're playing with fire now. And if you understand what Kissinger meant, we were not good friends to the Ukraine, in my opinion. We certainly weren't good friends to the dollar when we weaponized it in 2022. The irony is now there's all this talk about reevaluation and auditing. Well, be careful what you ask for in that cross-examination, because you might not like the answer. And then the US is no longer as sexy, as powerful, and as respected as it was. And I think that is the end of Pax Americana. Not the end of America, not the end of the US dollar, not the end of, and I'm American. And America is still, 4% of the population, 26% of GDP. China's 18% of world GDP. I don't think America is a failed state or a disaster. It is a disaster, but relatively speaking, we might be the best horse in the glue factory. It has fundamental problems. Russia has major problems, not so much in debt. China has massive problems too. So we're going to a multipolar world where gold is going to shine brightest among all of this. It's also very multi-dysfunctional across the board. We're not saying the BRICS defeats the US and the US just disappears with its tail between its legs. There is so much chaos coming. There is so much blood coming, metaphorically. It's necessary before we can ever get back up again. And so I think we've been talking about hangovers. We're already puking. The world's already puking. There's all kinds of indicators of it. We have to get this hangover over with so that we can get sober again. But between now and then, the middle class is going to get crushed. Markets are going to mean revert. Currencies are going to be revalued. Society is going to change. And hopefully we don't get more centralization and lies from on top, but more knowledge from bottom up. And, it's a very interesting time.
Iran, the central bank of Iran had its dollar reserves in the U.S. and it was actually confiscated,
yeah.
and they couldn't do any monetary policy because they hadn't the reserves to do any monetary policy. So these kind of examples show that central banks do not trust in the dollar as a reserve asset anymore, and that's why they're accumulating gold. And it's probably going to be way worse in that sense in 5 or 10 years from now.
And can you blame? I mean, it's one thing. America can carry a big stick when they're weaponizing or sanctioning Venezuela or Iran for political or oil reasons. But when you did that against Russia, a nuclear power already in bed with China for certain things, what the hell were you thinking in 2022? Who was making that choice? Even Jim Rickards at the War College in Carlisle, Pennsylvania, said he saw that day one. Grant Williams, day one, the first article I wrote after we made that decision was, oh, this is a seismic watershed moment, not just in gold, but in currencies and geopolitics.
Yeah. Also, I'm not sure what you were about to talk, Francis, but I think it's also interesting to see gold as now the resurgence of gold, not only as a reserve asset, but also as a settlement system, right? What you just said is that before, like, we went from what the interview that you had like 2 days ago with Lynn, was that there's a difference between pegging and convertibility of things, right?
Correct.
And you also mentioned that in some cases we also see like Russia and China, all kinds of members of the BRICS countries, Saudi Arabia, all those countries are looking for alternatives to the dollar, and they're looking at gold as a way of just saying gold is money and everything else is credit, as JP Morgan said before. And that we see the resurgence of the role of gold as being as such, as being an escrow, being sure that you will be paid. And in the world of tomorrow, that might also take a shape, and I wrote an article about it, on tokenization of gold and being able to also use technologies of DLTs to enable this on a massive scale. What are your views on that? Like, do you see this coming to reality?
One point I wanted to bring that might in part deal with your question is gold to me is an anti-fiat. That's how I categorize it. I mean, it's actually the original money and they're derivatives, but let's just most people think of the dollar. And we haven't spoken that much about how a collapse plays out. There is an aspect that is a bit of a potential perversion in how the right sizing of America plays out. Because in a contagion of debt devaluation, I've mentioned also that there's the extreme shorts on the debt at the moment, so I think maybe that won't happen right yet. But if we go into that point with the cuts coming and more people being added to welfare, what you actually get is an interest rate spike. And that can lead for a short spell that gold technically pulls off, and you actually get a violent schizophrenic dollar move to the upside, because a lot of dollars are offshore in debt in countries like this, Turkey, etc., etc. So the thing that's interesting for me, a lot of people can be thrown off the scent if they aren't aware of what can be going on. They'll go, oh, you guys were wrong about the gold, because it pulls back, say, 15% and the dollar starts killing all the emerging currencies. The key shoe drop will then be in that violent dollar strength, after whatever dollar gold dip might take place, that it starts going up on a schizophrenically strong dollar. And I always warn that schizophrenic strength, unlike trending strength, a surge, a spike, it's very much like a blow off in the NASDAQ in the 99s going 2000s, is an unhealthy. It's a sugar, it's a kid who's had too much cake and is running around. It's a hyper situation. That is invariably part of the collapse. It doesn't invalidate what we're saying as gold being the primary anti-fiat, and it won't restore the dollar as a hegemony. It will lead to destruction of those that are borrowed in dollars and have to pay back dollars, and therefore will have to print more rands, Turkish lira, whatever the case may be, convert them into dollars to feed this extra higher rate that now applies on their debt. So the clever thing about how the American system has got buried in is, the petrodollar, and there was also the economic hitman, which was they had to make everyone around them opium addicts too, to debt. And they made it in their base currency that only they obviously inside their country controlled. So by systemic design, in actual fact, we all should be prepared for an unhealthy super spike in the dollar based on an interest rate spike. And that will show that the Feds and the central bankers really don't set the rates, markets do, because this will be the rejection of debt and I always bring it back to the debt as a debt-based collapse. And once people say this can't be paid, it's unsustainable, it's too large, and you're right-sizing, you're going to be a smaller country with a much smaller GDP to live within your means. When you unwind all the hype and the leverage that's been put into the system, you're going to actually get debt collapse, rate spikes, and that it won't be even the Fed which will put it up. And for those that say, I can't see that happening, central banks set rates, I just point to the George Soros moment in Britain. They changed rates once, and then later in the afternoon again. That isn't that they had a cup of tea and a cranky scone and decided to change their mind and go again. They had to. There was a collapse in the pound, there was a collapse in their debt markets that was killing the currency. Now, the perversion of how the system's designed in America is because they are the hegemonist currency. Actually, their currency spikes because they've contaminated everyone with the same dollar-denominated debt offshore. And everybody will have actually a larger demand for dollars to meet those payments. So I also wanted to discuss this because if you aren't as I say, I'm future-focused. How does this play out? What is the rate of dollars? Some of our best trades will be overnight home runs on the basis of that eventuality. It's baked into the system design that it happens that way. And people shouldn't lose sight that gold will win in the end, but you can actually have some choppiness and even some pullbacks in the price. And I'd even say here's a localized high technically on our technical charts that we've got, but it's a great accumulation opportunity. The eventual winner is gold, but watch, there's many twists in the narrative. And I think that should be discussed too.
Yeah. But let's get back to this all ties into gold as a settlement asset, right? As opposed to a currency backing. And you don't have to wait for it. The dopium addiction we created in third world countries from Guatemala to South America and Central America and the East is, as John Perkins' book really brilliantly comes out, again, written years ago, but now coming to fruition. Well, look at the BRICS reaction since 2022, what they do. What did they just say in 2024 when they met out East? They're not trying to get a BRICS-backed currency, a gold-backed BRICS currency. They're trying to get gold as a net settlement part of a Enbridge-like 60-40 spread of local currencies in gold. They're not forcing the yuan on anyone. They're not redeeming the gold in Moscow or Shanghai. What they're saying is, look, guys, we're going to keep your currency so you can inflate or debase it depending on your debt levels, but we're going to back it somehow in gold, just like the IMF said. And the classic example of how this is playing out, which is scalable, is what Russia and China are doing with the oil trade. Again, unthinkable 5 years ago. 20% of global oil is outside of the petrodollar now. But look at what is Kyle Bass said for years. China needs a non-dollar energy solution. They don't want to sell U.S. or buy U.S. Treasuries to buy oil. They want to buy it in their own currency. Who do they have now as a partner? One of the greatest oil exporters right next door, Russia. What is Russia doing? It's taking yuan for Russian oil. And then it takes that yuan and goes back and buys things in China. And then whatever the spread is, they net settle in gold. On the Shanghai exchange comes back in rubles. So they're finding a scalable way to use gold as a settlement asset, not a gold-backed currency. And that's being replicated in 45 other nations that are moving away from the US dollar. Again, not replacing the dollar, changing the demand and the price of the dollar. And that is the future. And that will be in some form, even if it's through the IMF or the World Bank, it's some form. The jig is up. Central banks, the Central American countries, Latin American countries who've been absolutely gangbanged by U.S. monetary and policy. It's horrifying. And so what are they doing? They're tired of being the dog wagged by the tail. They're going to go around the dollar, through the dollar. They're going to net settle in local currencies, and gold is somehow going to be part of that exchange. You can't blame them. Again, doesn't mean they're turning their backs on the U.S. dollar. They're still going to need it. It's still part of the FX reserve. It's still part of SWIFT for now, and it will be for a long time. But they're tired of being the part of that feudalistic system that we created in the 70s. And so gold as a net settlement tool is absolutely not only projected to happen, it's happening right now. It's been happening since 2022.
Do we then see what's, for example, Willem Middelkoop, which you all are familiar, the viewers too, very important voice in the industry, has written already more than 10 years ago about the big resets, about the fact that we will witness a total revaluation of gold as it is. We talked earlier that Scott Bessent wanted to do that on their on their books, but that this would actually be kind of futile anyways, because it would be very insignificant based on all the debt that is outstanding for the US. But when we look at the world constellation, would this be a re-emergence of a gold standard? Would this be more a gold-powered era? Like what kind of gold and then would that be?
Olaf, do you want to take a shot at this?
Yeah, I don't fully agree with the view, for instance, that we're heading for hyperinflation in my own lifetime, probably. So I see a scenario of financial repression where we have low rates, basically just taking all savings and forcing them into the public debt, making it sustainable one way or another, basically the Japanese recipe. And it means that gold will be doing well because gold does well with very low interest rates. I think even like Larry Summers in the 1980s wrote a paper and he said, well, there's clearly a link between gold prices and low real interest rates. And in that scenario, probably we'll have the same inflation as always, or even higher, eroding the middle class purchasing power, and we'll see maybe social unrest and political changes as a result. But I don't necessarily agree with the view of a hyperinflation. I think we'll follow the Japanese recipe. I think it's a recipe that can hold for years and even decades.
There's a difference between Japan's situation and the US's situation. So Japan is a self-supporting Ponzi. In other words, their own government debt has been bought by the government and their citizens. The US has relied on international support, and the parallel is different. And also, to be clear, we aren't saying there will be hyperinflation. We'll get an interest-based collapse very quickly. I don't think you can have interest rates meaningfully, significantly higher than they are for any extended period without that happening. So it's just a spike. It doesn't mean it's going to 30%. It just has to be a certain degree of spike whereby you start to get contagion in the bond markets, and that's when they start. I think there'll be a lot of distraction. They might even do circuit breakers on the stock exchanges, the bond market exchanges, and there'll be a lot of skullduggery in terms of, okay, we stop here, stop there, when that starts to happen in an absence of bid. The hyperinflation is categorized as double digits. I will argue we've already had short spells in true terms. If you look at John Williams's shadow stats, his stats have shown that we've already been 10 or 11%. Technically, that's a hyperinflation. It's not a hyperinflation in Zimbabwe like 60, 70 and hundreds and ridiculous numbers. But once you get in double digits, that's considered a hyper. I would classify it more as a hyper stagflation, which is not the full hyperinflation, but it's a hyper mix of stubbornly high, near to double-digit inflation and terrible growth, in fact, contraction. So you actually got this combination of deeply recessional, and then there's going to be regular events, downside risks. So this is asymmetry to the downside. If you're talking about stock markets and everything, the true risk-reward trade is not to the upside on very many things. In normal, real, financialized assets, you have huge spike potential to the downside in assets. And the rates risk is actually to the upside. But a correct point, you can't sustain it for very long without going into the reset. So I do feel we're not that far away. But it's one of the worst things to say, because many people many times have said that. And the ability to print and pretend and cover up. I mean, at the moment, the biggest buyers, I will highlight again, of the US debt is the biggest growing buyers, let's put that, is the UK, that's just transported all its gold away and is now doubling down on treasuries. I mean, how's that not toxic bank?
Dumb and dumber.
You be the toxic guy that picks up Cayman Islands, Belgium and Luxembourg. You know, these are the growers at the moment. China and Japan are walking
Coalition
away.
of the willing.
So, you know, these are the toxic leper colony that said, what the hell, we're dead anyway. So people who go, well, our debt is still supported. This is orchestrated for me. Those are proxies, in my opinion, and there's probably dirty deals being done.
But to bridge the point, though, whether it's hyperinflation, I totally agree, John Williams, shadow stats, even Larry Summers, we're really closer to 18, 19% inflation if you use the metrics of the 80s. But to your point, whether it's hyperinflation or not hyperinflation, or whether it is the slow drip compounding effect of 3 to 4 reported, which is probably closer to 10 to 11 actual, well, that's either, that's death by a few cuts as opposed to a bullet to the head. It's still absolutely destructive to every citizen when using fiat money. Again, pick your zip code. And you got to ask, why are far-sighted countries in the East and even in Argentina and elsewhere looking at gold differently? Because they are preparing for this. They are thinking 10 moves ahead as opposed to one checkers move ahead or one election cycle ahead in the US or one propaganda campaign in the American dream that we're still what we were in the 40s and 50s. We're not. So, sense that whether it's slow drip death by 1,000 cuts, 3 to 4% compounded inflation, which we've never beat, or whether it's a hyperinflationary moment, it's still absolutely fatal to people who save and measure their wealth in paper money.
And the key thing about the higher number is it means it's a negative real rates environment, which is beautiful for gold. Yeah. And actually, the last time that happened, was during the wars, 33, leading up to the first revaluation, and again in the 70s after the Vietnam War for America, because they were trying to, Volcker had to push rates to actually eventually kill the gold market, incredibly high.
Yeah, underlying is a great transfer of wealth from certain parts of citizens of certain countries to citizens in other countries, and I think we'll see it in that very sense. People with low or real negative interest rates or returns, they'll have probably their net worth over the span of 10 or 20 years, but there's also winners in this very equation. It's a transfer of wealth from those middle classes to people who are smart enough to prepare for what is coming.
Yeah.
So if because I think also it's important to wrap up then on this note. If we just now look at this situation now and make it very pragmatic, very tangible. You just said, Francis, that you think after like this unemployment numbers they published, and if they don't look good, this is confirmed recession's coming in. I just had a conversation about this with Henrik Zeeberg, who just took his flight back to Copenhagen, and it was exactly the same. He thought, okay, so now if we have this coming in, the Fed might just give like this last print, the last big print to still reassure the markets. The liquidity injection will shoot up all risk assets up. We'll have a tremendous last bull runs to say.
But the allocation of that liquidity won't go in the same direction. Less and less people, the minds and the heads have been turned with regards to debt. Some of it, when we collapse, will go into debt, but not to the same degree. Because what everybody is, they've realized from the last cycle, I think you'll see more of it go into gold when they do the QE print, and more of it going in the new direction that they've been shown. So that's the concern. I did, super jump your question.
No, but that's a very good point. That's a very good point that you make here, because I think it's important to know, and we all have different perspectives, and that's great, that to understand that, what you just said is where will this liquidity go? You said also gold will retrace, it's a local top, so there will be a bit of a drawdown, maybe great opportunity to actually fill your pockets.
Yeah.
And then after that, it's going to be a deflationary bang. Yeah. And then for many years, maybe sideways. I don't know about that. We can discuss about this, but let's maybe conclude on this topic then. So what are your views on...
Yeah, well, I think that's... the liquidity, I'm not sure, because there's always a saying, you can bring the horse to the pond. I guess it's in English.
Make it drink,
yeah, but you can force it to drink it. So I think it's a little bit like that. And I think we'll have a recession. Francis mentioned the yield curve, which was part of my PhD thesis, to be honest. And it's one of those things that we had very rare false positives. And I think we'll have a reversion in the yield curve, and that will signal a beginning of the recession that's overdue for a long time. And it's probably going to be worse than the last recession. We had a longer buildup of debt, more years of a repression of volatility, and I think it will come out bursting when it's happening. The Federal Reserve, as always, will react to whatever is happening in the economy in the US, but I'm not sure that liquidity will push up any asset prices in the short run. I'm actually pretty pessimistic in that sense, but I do think gold is there an excellent way of riding that moment whenever a recession occurs.
So we already saw a top on NASDAQ, S&P, that's already topped out. You won't see that coming back in the next half year.
Yeah, I'm not. I don't have a glass. But if I would make a bet, I would say we won't definitely.
Okay. We've got a non-farm payrolls number coming first Friday of the March month. And I think that's going to be a show and tell moment if we start to see that unemployment number roll. Because don't forget, they've been hopelessly overstating them for the last year. and they said because of unemployment, the previous recession wasn't a recession. Then they did about 10 reversions out of 12 months, and then it essentially admitted that.
Yeah, but that data is coming from the Bureau of Labor Statistics. It's an open lie. I'll just say it. It's an open lie. When you talk about recession, I'm sticking to the case I made a year ago. We're already in a recession.
Correct.
If I wait for the NBER to tell me I'm in a recession, that's like a doctor telling me I'm sick when I'm already at the funeral home. I'm already gone. And again, it's for the middle class, it's a recession. Ironically, at both other extremes, for the asylum seeking or the really poor, they're bailed out, and for the ultra rich, it's painful, but it's not fatal. The middle class, quantifiably, and I won't get into all the verticals, is in a recession. You can feel it, you can see it, and you can mathematically prove it. If you wait for the charts, that's different. Just ask the man on the street. But this is the other thing, going forward, and I had this offline conversation with Russell Napier 4 years ago, who was once a deflationist, is now an inflationist. And I don't mean we won't have deflationary moments before we have inflation cycles, but we need negative real rates. We need inflation higher than the yield on the 10-year or our sovereign bond. But I'll never forget what Jean-Claude Juncker said, the former president of the European Commission. When the data is bad, we'll just lie. And when it comes to Bureau of Labor Statistics inflation, it's an open lie, off by probably double digits. So they can actually have their cake and eat it too. Hey, we still have positive real rates, we're fighting inflation, but actually we have very negative real rates.
You've never had it so good.
Yeah. Well,
low inflation and great growth, and people are like,
yeah, and your average plumber doesn't know the spread between the 10-year and the CPI numbers, but they feel the inflation every time they walk out the door. So that's just a lie. It's a lie like the revision of the labor data after the election. It's appalling, the amount of dishonesty that's out there. So just check your facts and be a little more critical. But we're going to have to run negative real rates. Whether it's reported accurately or not, we're going to have inflation. And whether that's negative real rates officially or unofficially, the man on the street's going to feel it. And that goes back to the original point we're all making. Rich or poor, middle, high, low end of the spectrum, you got to be your own central bank. You've got to protect yourself if you can. And I say that with the very humble caveat, having come from a humble background, that I know a lot of people just can't do that. They just can't. And that's the biggest tragedy of all.
Yeah. All right. I think we're reaching an end, but I actually want to ask this question, which I usually hate asking, but I thought it's quite interesting. Yeah. What are your projections in terms of gold? Are we going to hit like the 15,000 ounce in the next years and next decades? That was Henrik's prediction. What are your takes on that?
I think it's going to speak almost more to what the dollar has become, because when you're asking what will gold be, you're actually asking what the dollar will be, because I'm assuming you want a dollar price, not a South African rand one, for me, I'd actually say, if you give me enough time, I'll go well above even what Henrik has said. In terms of the scale of things. What Matthew has just been referring to is that actually you're in a financial war against people who are inherently dishonest. If I just summarized his phraseology, just in a one-liner, you're inherently in a financial warfare, which could even lead into something social unrest and something physical as well, but let's just avoid that side for now. That when the curtain gets pulled back, the degree of rot, I suspect, is far larger than what you hear and see. There's other ways that they've cheated, tricked, and the scale of which is larger than you can imagine. Because that's typically what happens when you have malfeasance and active acts of corruption. And that's where we are. There's a cacocracy in that sense. It's a global cacocracy, and America's been part of that. And they probably have mechanisms that we've yet to work out of hiding it. So I go on the high side of that, but it's also a question of what is the dollar. At some point it will have a super surge, and you could actually have currently lower than what we are now as a result of what I see as a possibility. I'm not saying the milkshake, as it's referred to by the originator, spike is the only way it plays out, but it is systemic design, so you could have it a bit lower for a bit. But if you're giving me 5-10 years, it's not a sell for me for the next decade. Okay. Unless things really start happening super, super quick. Because as I've mentioned, you get round one, you get round two, and it just seems like a bitter, dismal cycle. The Depression felt like it never ended for those that wrote the book on it. And that was only sort of 1929 through to 33, 34. It was already supposed to be getting better. It just kept coming at you. So you could have a decade of that, given the scale and the synchronization, the disruption, and if you could get war distractions. So I see it's not impossible to have 6 digits even. But what is that dollar? anymore.
What's a loaf of
And the
bread
world
cost?
will look like totally different.
As you say, a loaf of bread could be $25 or whatever, who knows. So I find the prediction side hard if I don't have something technical. We have technical levels, but it's also part and parcel of going through. So we've said 6.8, 7.5, but you increase the chart size and I'll give you a bigger number too. So it sounds a bit evasive, but I would go high side on Henrik's take. And I would say this labor number, especially with the current recent policies that they're doubling down on, could be a forbinger of a major loss of employment. And the employment truly is it's the final shoe. By the time you see employment fall, you've missed the short trade. You should have already been short for a while. It's not a leading, it's a lagging indicator because people don't want to fire and then rehire people. It's expensive, it's costly. And so watch this labor. In fact, we do a live trading day on it if people want to see it in with us.
I hope we'll be able to publish this before as well. Matthew, your last analysis.
Look, I mean, my lifetime gold's gone from $35 to $35 to $3,000 basically. And that's, I'm getting pretty old, that's a long time, people would say. Meanwhile, the purchasing power of the dollar versus a milligram of gold has lost 99% in my lifetime. I think we're just in chapter 1 of the gold price. It's almost a specious question because it's really when the gold price goes up, it just means the cost of a loaf of bread goes higher too. It's not about getting rich on optionality of price discovery. Gold's up 44% year over year from where it was last February. But again, that's sexy if you're comparing it to NVIDIA, but I'm just not. I'm just comparing it to the dollar, my currency, my wealth measurement. So if it took us 50 plus years to get from 35 to 3,000, where are we at for the next 50 years? Actually, I think it's going to be a much more accelerated process because the destruction of the US dollar and the distrust of it has been so accelerated in the last few years. I think Henrik's being conservative. I think we're in chapter 1, or as the US would say, inning 1 or 2 of the gold price. And again, not because gold is getting more, its properties have changed somehow magically, this indestructible asset that was there before even our interstellar universe was created. It's literally in our bloodstream. It has a spiritual component. But I think gold will easily move to 10,000 much faster than the next 50 years. But again, be careful what you ask for. That's not because you're going to be that much richer. It's just going to be your currency is that much weaker and you're protecting it with gold. But I think the acceleration from 3,000 to 7 to 10 to 12 will be much faster. And to Francis' point, give me the bigger chart though, what's going on with the US dollar and what's going on with geopolitics and what's going on with inflation, reported or misreported. So, but I know it's clickbait to say Piepenburg said $12,000 gold in 2 years. But again, we're only in the beginning. And it doesn't mean, again, that gold goes in a straight line, that America disappears, or the US dollar is disappearing as well.
There's one small I'll add on, and I know we're winding down, but gold represents truth. And if we're going towards an oligarchical, totalitarianism, communist vibe, they are going to want to own all the truth so that you don't have it. So there is also that possibility that gold, eventually citizenship owning of gold globally won't be possible if we get a really draconian gold. Because when you're selling a lie, it helps to lock the truth up in the basement that no one else has. And that possibility must be considered, and it will be deemed a rebellious act to be central banking yourself with physically held gold at your home and property. And that is a potential warning. And I've spoken often about the day of when they tokenize it and they want you to declare it and they gather the information, then the unrealized capital gains start hitting, and then you have forced seller to get out of it, to pay for the taxes, and having black gold, which will be off-grid gold that is undeclared. You're going to have to decide between legality and morality. And think about it now, because you're going to make the wrong decision if suddenly made to think of it on the spur of the moment.
On the last note, Olav.
Yeah, just very short. I mean, I don't do price predictions, but I mean, we have the rule of 72 in finance. So what return, annual return, you divide it with 72, and you get approximately the number of years you double the price of gold. So in this case, we had, I don't know, maybe 10%, despite everything, maybe a 10% a year since the change of the century. So I would say this rate would actually go up a little bit, maybe 15%, but that would mean we double the gold price in 5-6 years from now. So I think there will be an acceleration. Maybe not every year will be just as good as any other year, but we'll have an acceleration of this time span that's needed for doubling the gold price. Maybe we've done 10 years before, and that will now be 5 years. So that's how I look at it myself.
Beautiful. Well, I think it's a beautiful conclusion, very optimistic for gold holders, and obviously to actually more arguments to be jumping into the gold, life raft or whatever you want to call it. To the viewers, again, if you want to get the chance to win 1 free gram of gold, comment the word GOLD, aka life raft, into the comment section. Thanks for watching, and of course don't forget to subscribe if you enjoyed this interview, and I'll see you in the next episode of the Microscopic Podcast.